Hi, everyone. This is Rob Roy of Elliott Options, and welcome to this week's TradeFinder Live. Welcome to all of you that are joining us for the first time this week. Just to give you a bit of a rundown on how this works. First of all, we have to go through and show you this wonderful disclosure disclaimer. It's the legality part of things, so we're required to do it. If you are new tonight, please take a screenshot of it, read it in detail in your leisure. I'll highlight the couple of things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers and a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So again, those are the two key things they want us to highlight with you. And so moving forward, the way the process works, we'll spend a few minutes talking about the market. And last week we were focusing on that 381 level, and we still are. So I'll show you that. Interesting day today, though. So we'll cover that. Then we'll go through and talk about any closed alerts that we may have done for our subscribers, so you get an idea of how that works with our website, Elliott Options, which is ewotrader.com. That's how you can take a look at it. We have a brand new website, just updated, so peruse it at your leisure. I think you'll find it's pretty neat. A lot of good information there. And then we will go through and highlight and look at our case study considerations for the past couple of weeks. Then we'll look to see if we can find a new case study consideration for this week. And with whatever time is left, we'll answer questions at the end. So I want you to feel free to go ahead and post your questions. We do have support staff on. So if you have an administration type question, they can answer it, or if it's something that you want to send directly to me, I'll cover those at the end. So I just wanted to say, if you have a question while we go through, ask it, but because I get distracted if I try to, I see them coming in or whatever during the broadcast, I'll cover them at the very end. So that's how the process works. Today was a pretty interesting day. Did a seminar earlier today, webinar, I guess today. And then today's vernacular, we don't do seminars anymore. It was from an FX group that focuses on Elliott Wave, and I guess they found us on the internet, all of you guys that are watching us, and they invited us to participate, and we did. And so we were honored to be invited to do that. And one of the things that I talked about during that broadcast was how I do miss the days of doing live seminars. I know that the webinar gives more people the ability to watch, and you don't have to travel. And I know there's some positive things in doing these webinars, but I miss the days like here's a picture we found that's me with John Nigerian and Guy Adami. You probably know both of them from CNBC on a lot. And we talked, this was in New York City a few years ago before everything changed. We were already going to webinar-based stuff even before COVID hit, and now it's just there's nothing that's done live anymore, hardly. We used to do New York, Las Vegas, some of the bigger cities. But so anyway, just to show you a little bit of a flashback, kind of made me think of that when I was mentioning how I kind of miss the energy of a live room. But we do our best to keep things lively as we go through and do this webinar format. All right, so here we are in the market. So as you can see, we haven't really gone anywhere. You know that we had this big zigzag pattern where we hit right at that 381 level. And as you would expect, this is the power. This is why we talk about this stuff. This is why we focus on Elliott Wave and Fibonacci ratios, because they work. It's not a coincidence that the market went up, boom, hit 381, and can't get through it. It's acted like a ceiling because it's major resistance. And that's going to be the telling sign of where we go from here. As you probably saw in the last S&P update, if you haven't, take a look at it at YouTube, our YouTube channel, Elliott Options. Update it at least once a week with an S&P market update. And we talked about how we may, if that ceiling holds, if you will, retrace or correct back to the 61.8% extension level, or if we break out above that 381 level, the next stop is 420. And made a little joke about 420 with the fact that, hey, there's a lot of money moving into the cannabis sector. So watch that video again. If you haven't, showed an ETF that you may be able to participate in there. we're going to be covering in the next couple of weeks some different sectors of rotation that with the new administration coming in, things are going to be a little bit different. The liberals are in charge versus conservatives. Money flows into different areas. Investment managers move. Money moves when things like that happen. And so we'll be talking about sectors that you may want to be looking for to put some money in for the rest of the year. But cannabis ETF is certainly one for you to take a look at. So that's the situation that we have. The thing that I wanted to note about today is, look, we have a doji today. So maybe tomorrow we get the idea of, are we going to correct back down? It was curious as to what happened on Friday, but we were moving into a 3-day weekend, right? Because the market was closed yesterday in observance of the Martin Luther King Jr. holiday. So I posed the question, was that just position squaring? Nobody wanted to be long going into a 3-day holiday, and so square positions and drop down a little bit. That appears to be the case, at least today, because we bounced right back up. But that doji is interesting to see if we get a indication on the directional move from the markets at this point in time. And this is one of the subject matters that I did in our presentation earlier today at the event. Was with the market at a crossroads like this, the prudent thing to do is to put on a lot of our strangles, which we have in our volatility portfolio. So we have a lot of positions that can profit whether the market breaks to the upside or the downside. We still have some impulse positions, and I'll go ahead and show you one of those right now. This is the case study consideration that we moved into an alert. So this is actually a full-fledged, he tried to say, alert that was sent out to our subscribers. You can see this was on MOMO. What a great name for a momentum move or impulse move, right? The stock. And we actually sent this out as an alert last week, same day we were doing this TradeFinder live last week, and the entry point was, as you can see, a breakout from what I like to call that launchpad effect. If you've been watching any of these videos, you've heard me talk about that before. Live on the Space Coast, so kind of a analogy with the space program, if you will. What I'm talking about is when a stock consolidates in a very sideways pattern, quite often the stock will blast off. So the sideways consolidation acts as the launch pad, and then the stock blasts off to the upside. So that was starting on the day that we sent it out, and you can see the DMI was confirming, hey, yep, the ADX was breaking above 20. Great separation between the two directional indicators. Looked like there was support for this to continue to move to the upside. Well, continue to move to the upside, it did. Now remember, let's go back and look at this one more time. We're dealing with a $15 stock at the time. So this isn't a $1,500 stock like some of them, $15. The very next day, there was follow through, as quite often there is. We talk about this a lot with our strangles, that when you have a breakout, and this is true not just with our strangles, but with any break of major support, major moving average, a triangle consolidation pattern, when you have a breakout move, you want that follow through day, the continuation day. Well, the way the stock broke the previous day when we entered, then it looked like, yeah, that move was so strong, we're probably going to get a follow through, which we did. But now, as you can see, at this point in time, we are overbought. What's the rule? Do I have to say it? I'm going to say it anyway. No security in any time frame is very far away from the 10-day moving average. Hopefully, a lot of you put that in the Q&A box. It's becoming a joke or a fun thing, but it works. It works. It's a rule. We talk about with Elliott Wave rules and guidelines all the time. That's a rule. It's just a hard, fast rule. Follow it, and you'll see that it works. So we had the follow through day, which allowed us to go ahead and send out that closing alert the very next day for nearly a 58% gain. And look at it, it says 0 days in the trade. Well, how can you make a gain in no days? Was it a day trade? No, it was the next day. But the fact that the exit alert was sent out less than 24 hours from when the entry alert was sent out, the website registers that as no days. You didn't go past the 24-hour mark, so it didn't count as a day. Nonetheless, it was the next trading day. So the entry was January 12th. The exit was January 13th. And we had a quick 58% literally in one day. Now, we wish all of the mark-to-market graphs look like this, where you just explode to the upside. You can see from the time we entered, it still went up into the close. And then we had to follow through the next day. So we didn't enter right at the end of the day, right at the top of the day on the 12th. It continued to move up after we sent out the alert. And then we had a very successful trade. So my point here is we are doing some sprinkling of impulse trades in here, but not a whole lot. We're really focused on letting the market tell us where it wants to go from here. The hardest part of trading is picking a direction. Well, we're here at this 100% extension. We've been talking about that for a very long time. The market's there. Now, we can go to an extended C wave, which is that 161.8% extension, but it's important to remember that it's done its job. We had a 61.8% fib corrective level. That was the target price. It hit it. So if it stops here, that's well within the rules, and a corrective move back to the previous fib level is very common. So either one of these two things could happen, which is the reason why we have a lot of positions of strangles that profit regardless of direction. We don't really care which way. So the inauguration is tomorrow, and we'll see if that ignites the market to move one direction or the other. If there's follow through, maybe there was some pause to see if everything was going to go smoothly, whatever. But we'll see if the inauguration sets things in motion for continued move higher or a corrective move. Vice President, or I guess you should call him President-elect Biden, laid out his stimulus plan last week. There's some conversation of whether or not there's going to be enough votes, because remember, technically the Senate split 50-50, but the deciding vote goes to the vice president. So that's why everybody's saying that the Democrats now control the Senate. So when you have a split vote, the deciding vote is the vice president. So technically, if you have a 50-50, the Democrats are still in control. They have that 51st or all-important tie-breaking vote. So right now, there's a lot of rotation going on. As I mentioned, we're on top of that. We're going to be sending out some alerts for some of the new. We're going to stay with ETFs or specific minded stocks, as we're talking about, like that MOMO. So if we find a scenario like that follows within our rules, we're not going to hesitate to put those on. The majority of the stocks follow the market. But when you use the word the majority of the stocks, that doesn't mean all of them, right? So not every stock follows the market, the majority. So there's exceptions. So even though the market has consolidated now for a little over a week, there are still directional trades to be had. We're just cautious on those. But if we find a good one, as we did with that MOMO last week, we do want to dip our toes in the water and take advantage of that. But right now, our strangles are sitting in a really good place. If there's any follow through tomorrow with the market, at least half of them are going to come off. So they're that close to the profit targets to take those off. So that's the market. And that's also the case study update, the alert that we sent out to our subscribers. So our subscribers enjoyed that quick one-day gain since we talked to you last week. Now let's go through and look at some of the case study considerations from the previous TradeFinders and update you there. And then we'll look for a new one tonight. So we talked about this FNV, Franco, Nevada, and that one goes back to the 15th of December. This is what it looked like when we entered, and you can see this support level right here at the 130 level. And we've been waiting on it to move, right? It came down and it tested that 125 level, moved back above the support level at 130. And here's where we are now. You can see it's finally broken out. And more importantly, it's broken below the support level at 125. So where can it go from here? Well, that is a good question, because at this point in time, I'll go ahead and condense the chart and see that on this move to the upside, we had a triangle here. Hopefully you're starting to see these without me having to show them and draw them all the time, that you're noticing them in charts as well. That's the point of the breakout of the triangle. And you know the triangle rules. I've told them to you over and over and over again that when you have a triangle and you get a breakout, eventually, And this is the same thing that goes with gaps. We talk about this. Gaps get filled. Sometimes they get filled immediately. Sometimes it takes a while. Same exact principle with the breakout of triangles. You're going to move back to the point of the breakout of the triangle. Sometimes it happens very quickly. Sometimes it takes a while. So the next target price could very well be right down here below 110, which is right where the breakout is. So that's what we'd be looking at as far as taking profits off there. But the key is it has finally broken out and made a pretty significant move to the downside. Next one, McCormick hasn't done anything. So here's where we are. It's really no different than where we got in or where we looked at it as a case study consideration back on the 15th. So it's been a month. This is about the time when they start to move. The average day, or the average length of time, as I should say, in our strangles is a little over a month. So it takes some time for them to move. This one should start to get going now soon if it follows along with the average time frame. So far, it hasn't done anything. We take a look at the ADX. You can see it's starting to creep up. Notice what's happening here. So this is known as divergence because the stock has done nothing, right? Through this entire time, the stock has gone absolutely dead sideways. But the ADX is creeping up. So something underneath, an undercurrent, if you will, is occurring here. This one's getting ready to go. So it's like that pressure building up. So you have, gas leaks or whatever, the pressure, and it blows the top off. This is what's occurring here, kind of the analogy of a stock getting ready to make a breakout move. Doesn't tell us which way it's going to break out. I don't pay attention to the fact that the sellers are in control here. Maybe it does break to the downside. But this is just telling you with the fact that we have higher lows here and the ADX has been working its way up when the stock has been doing nothing. This one is getting ready to move. So maybe next week when we talk about it, we'll have a whole different output or outtake on McCormick. ACGL, we had this resistance area here. We had this nice ascending triangle pattern and the doji going back to the 5th of January. And you can see we had the false breakout. Now let's talk about this because I just showed you in the MOMO trade how we were looking for that follow-through day. Note on this breakout day that occurred here on the 6th of January, no follow-through. The next day we came back down. So we didn't follow through on the upward breakout. So that's a head fake. That happens in the market, which is why we're careful not to take the other leg off of Strangle until we have a definitive move in a particular direction. I know it's tempting because, if you take that other leg off, when you start to get the break, if you take the other leg off, you're going to make a greater profit on the remaining leg that's moving in the direction that the stock is, or gaining value in the direction that the stock's moving. But if you get one of those head fakes, then you're in trouble because you can take off the wrong one and you go to zero and move like that. So it came back, tested the initial point. Then we had a breakout move to the downside, and we did have a follow through, and we moved to the downside again today. So here we do have confirmation of a downward move. We'll see if that continues. I want to look at the 10-day moving average. You can see we're below it. Actually closed below the 50-day moving average today. So there's not a lot holding that from coming back down here towards this level of around 32. So that could very well be the next stop there. So a breakout out of that stock as well. So Franco-Nevada broke out, Arch Capital broke out. McCormick hasn't yet, but it sure looks like it's getting ready to. And then here's Workhorse, which is also one that we looked at back on the 5th of January. And you can see, boom, we broke to the upside, and now we're coming back down. So this is the important level to watch here. And we actually have this as an alert for subscribers. Moved up, profitable. You're wanting to see, is it going to continue to the upside? The DMI is starting to show. Look, it's trying to get there. So notice what happened today. And notice that on this corrective move here, the ADX is still going up. It's going up from the start of where the breakout occurred here, and it hasn't pulled back, even though the stock has rested a bit. So let's look at that 10-day moving average, and there you go. If you're wondering what was going on here, well, now you know. So we came back down to the 10-day moving average, and now we're holding right here above the 30-day moving average. The ADX curled back a little bit now, but we'll see if this area can hold and this continue back to the upside. Regardless, we've got a strangle. So if this ends up being a false breakout and doesn't hold, or if we're building a larger triangle here, this is not exactly the ideal scenario, not really what we want, because you can see that that could take a little while to continue to build into this descending triangle. Maybe it does that, maybe it doesn't. I always talk about the fact that it's frustrating when a triangle pattern moves into a larger triangle pattern, because you have to have patience, right? Because these positions, buying a call, buying a put, by nature, they're going to reflect a loss the very next day after you put them on. Time decay is a fact of options pricing. And so every day that goes by, tick, 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 a little bit of a loss comes out of the position until the breakout occurs. And then, so it's like drifting down on your risk or your mark-to-market graph that we talked about, and then vertical move to the upside when the stock breaks out. But if it takes longer, my long-winded point here is that patience is usually well rewarded. So we don't know that that's what's going on yet, and we'll just have to wait and see. But this stock can really move for a $25 stock. So whichever direction it decides to move, that's fine. We don't really care. So last week we looked at Duke. So here's where it was on the 12th, and we did this one as a strangle as well. You can see we were sitting right at this area of support there around the 89 level, big descending triangle pattern, really nice looking descending triangle pattern. And here's where we are now, trying to break to the upside, but can't call this a breakout yet. This first day here on the 13th, the very next day, tried to break out, and you're like, okay, do we have something going on here? Well, we need the follow through day. Well, we didn't get it. And we had an inside day the next day. Then we tried to break out again, but no follow through today. So we can't call this. It looks like it's trying to break to the upside, but that upside breakout has not been confirmed. So that's the key that we talk about as far as confirmation. It hasn't been confirmed, so we wait. We wait to see which way it's going to break. Let the market tell us. And again, we don't really care, because if this doesn't hold, and you've probably listening to financial networks, there's a lot of talk about the energy sector. Money's moving in. You've put gas in your car. You know that oil prices are going up. So you know what's going on with the energy complex, regardless of what you hear on the financial networks. The energy's going up. This very well could turn and move back to the upside. But if it doesn't, let's say this area here at 89 doesn't hold and we break down, we still have this gap down here. So we could get a pretty nice move to the downside, which would be fine. Again, that's the beauty of the strangle. We just simply don't care. Now, the preference would be they break out pretty quickly after we put them on. The reality is some do, most don't. Most of them take their time. They break out when they're ready. And we put them on. And the biggest mistake that I've made with these over the years since I started this strategy is waiting too long to get in, trying to wait for a pattern to get too perfect and missing breakouts. That's been the biggest mistake. I'd much rather get in early and have to be patient and wait for the breakout than to miss it altogether. But that's what I used to do, because I wanted the patterns to be so perfect. And the patterns don't always come perfect. In other words, what I mean here is if we go back and take a look at this with this triangle, you could look at this last week and say, well, let's just wait. Because look, we have this area here. Wouldn't it be nice if the stock went up, boom, down, boom, here, and just moved right into the point of that triangle? And that's the kind of thing that I would do. And wait, oh, we got to wait. Look at this, another week or so, it'll be right into the point of the triangle. Well, you can see that the stock had other ideas. So it decided it wanted to move, and it hasn't gotten to that point of the triangle yet. Maybe it comes back down to it. Maybe we're just testing this breakout here, and then it rockets back to the upside. At this point in time, that upward breakout has not been confirmed, but it could just be a test, and then it moves back to the upside and continues higher. We'll see. I did want to note that right now the futures are really not doing a whole lot, because I noted that we had that doji on the chart, and tomorrow may be an indication of which way the market goes over the near term. Futures are up 7 1/4 right now, so it's not really giving us much of an indication. Sorry about the flashback there. I just wanted to include that with the talk about where the market was. So those are our past case study considerations. We also talked about, and somebody brought this up, I believe, tractor supply. It came up on our search. We looked at it on our search. You can see this bit of a vertical move here. So this is last week, the 12th, and I wrote down that we had a 155 target price. And that was because said that if this upward move continues, we're probably going to go test those recent highs. And looking at the DMI, you could see why we looked at this. And the ADX moving to the upside, we had separation there between the directional indicators. It showed up on the search. So we wanted to see what it would do at 155. That was going to be an area of resistance. Well, you can see we've broken above that, and now we're coming back to test this. So we're watching this really closely. Now, I made a mistake on, I didn't make a mistake. I got a little bit too cautious on a stock that broke out like this, and I was waiting on the comeback for it to test, and it didn't, and it turned around and went back to the upside. And that was on Intel, because they changed the CEO. I wasn't expecting that. So we don't want to get too cute and outsmart ourselves. Same thing as waiting on the stock to get right to the point of the triangle. So watching this test as it comes back down towards this area of support, but also look at the 10-day moving average. Disciplines, well, you've heard me say it so many times, but discipline will not allow me to put on a position when we're that overbought. Just can't do it. Have I missed some trades? Yep. But also there's trades that have come back to test the area, and we've gotten a better entry. So I would much rather do that, pardon me, than to try to chase a trade that's already gone too vertical. Because when it goes vertical like that, they pump in the implied volatility. So then you get a double whammy. You get all the volatility coming out, the stock retraces. So you're getting the movement in the wrong direction. You get implied volatility come out. It hurts in a hurry on the position. So I would rather be a little too cautious, waiting, and miss a trade here or there, rather than to jump in and have one that just starts so far behind the 8 ball because of the move back to the 10-day moving average and the drop in implied volatility. But I wanted to show you that one because we wrote that down as one to watch with this potential break above 155. So if it breaks above there, we were going to be interested in it, and it did. Now we're waiting to see, are we coming down to test it? And it's still a little bit overbought. So it just couldn't pull the trigger today either because it's still a little bit overbought, but we're getting close there. And again, I talk about this a lot too. Wouldn't it be perfect if the stock came right back down to that 155 level and the 10-day moving average moved up to the 155 level and they meet right there? So you meet right on top of support at the 10-day moving average. That would be great. That would work out well. The market doesn't always do what the setup would be. Oh, that would be perfect if it did that. Sometimes it does, but quite often it doesn't do that. So we have to just keep an eye on it. But it's on the watch list. We're watching it every day. So I wanted to update you on that one as far as a directional move. If you're looking for something from a directional basis, then we have the final target up here, the wave 5 high around 170, which I think is the likely next move here. So if we put the DMI on, you can see that it's a pretty good looking DMI. The ADX just getting to 30, so plenty of room to run there. My concern is that it opens big to the upside tomorrow, that we don't come back and test this and close that gap more and then it gets overbought again. I hope that that doesn't happen. The DMI is saying that that's a possibility. And if it does, then we may have to say just flat out too late to get into that one. But we'll see how it trades tomorrow. So if you want one on your own watch list to keep an eye on for directional play, take a look at that TSCO for tomorrow. All right, so let's go ahead and take a look at our search results for tonight and see if we can find a case study consideration for the coming week. And as you can see here, looking for the bullish impulse, 0, none. I haven't seen that very often, have we? Usually we have a couple of them at least. 5 or 6 is a lot, but usually we have 1 or 2, none. 0 bullish impulse stocks. So is that telling you that, hey, we're breaking down to that 61.8% level? Not necessarily. It's telling you the market's gone nowhere over the past week plus, and it's consolidated. And through this consolidation, again, the majority of stocks follow the market. Then there's nothing that has triggered based on our set of criteria to look at and then apply Elliott wave to, just because the majority of stocks follow the market. So there hasn't been anything that triggered today, even with the upward move in the market, to give us an entry to look at tonight. Again, back to that doji glaring there, pointing out. So we can't even look at the bullish impulse versus the wave 3. Well, that means we're going to be looking at another strangle, something from a consolidation standpoint. Look at the opposite. Look at the consolidating stocks back up above 100. So we had started really low, like 73, and then it built up to over 100, and then it backed off all the way back down. Now it's back up again because the market's gone nowhere for the past week or so. So that's, when you look at that, 107 possibilities. That's a lot. So let's compare that with those stocks that are in a bullish wave 3, and you can see that pairs down the list drastically. So there's a lot of S&P 500 ETFs in here, tons of them. Well, that kind of makes sense, doesn't it? Because the market's consolidating. So all these things are consolidating. In fact, there's nothing in there that is not a, we can look at the XLK, which is the tech sector ETF. But these are all versions of the S&P. Yeah, we can look at this one. Fidelity's tech index. There's a lot of questions about what's going to happen with technology sector with the new administration. You can see the consolidation there, ascending triangle right in the wave 3. Remember, Elliott would say this is likely to break to the upside when you have a triangle within the wave 3. Our trader's approach is based on experience. Let's cover the downside as well. Let's not pick a direction. We don't need to, because we have those strangles that work really well on a breakout. We don't have to pick a direction. If you're putting on a straddle, different story. Pretty hard to make money in a straddle, but with the strangles, we don't have to pick the direction, so let's not do that. But that's a really good looking ascending triangle, and you can see the ADX is down around 12, so a little bit below the 13 level, which triggers. So that's not bad looking. So we might as well keep that one on there. And let's look at the tech sector. And these are two areas that I think the market's trying to figure out, because these are not on our list of where money is rotating to with the new administration. So I think the market itself is trying to figure out where we're likely to go. Now this one's interesting because there you can see that the ADX has ticked back up again. Same scenario that we were talking about before. Now we don't have a set of higher lows on the ADX, but it has ticked up. And then when you take that off, you can see again another triangle here. We call this one more of a symmetrical triangle than ascending. But another ETF that's trying to figure out where it wants to go from here. So you can see that wave 4 projection. So that gives you an idea, and that makes sense too, because it's also an area of support. It goes right through where that wave 4 is. Now that's not the reason that it's drawing the potential wave 4 there. It just happens to coincide with the support level. And when you have more indicators that give you the same target price, it gives you more confidence. But again, we need to see the breakout first, because this could easily break out to the upside. That wave 4 is just if it breaks to the downside, then it could come down and the wave 4 could be labeled somewhere in this area. So we have to wait for it to give us this move. So 2 right there, really good looking strangles from the pre-computed list. I don't really like to deal with real estate REITs or ETFs. I know that there's times when they've moved, but they don't move enough for me. And then when you get into these ultra ones that are leveraged, just it's important to remember that when you're looking at things like this, these ultras that are not just tied specifically to the index, those are using futures contracts as leverage. Futures contracts have time value in them, just like options. So basically what you're doing is if you put on one of these, and I know a lot of you do because you send messages in on YouTube or even some of our subscribers, when you're doing this, you're giving yourself a double whammy on time decay. So you're putting options on an ETF that's using futures for leverage. So you have time decay on the future side and you have time decay on the option side. It needs to move. So the leverage is great if you get it right. If it moves your direction and it moves your direction in a short period of time, yeah, that leverage can work for you. But as we always talk about, leverage is a two-way street. Leverage is great when it works for you, but leverage can work against you as well. Protect yourself, which is why we use the strangles when we have this kind of scenario. We're protected, and I try to stay away from these type of ETFs that are leveraged with futures contracts for that reason. So, you know, there's been other ones in the past that have gone down to near zero before they move back to the upside. We wonder, well, how does it do that? I mean, how does it go down to nearly zero? It's because of the time decay factor is what causes that to occur. So just be careful when you're looking at those and understand the way they're priced. So there's a couple ultras there. Looking at the QQQs, let's just take a look at that real quick. I mean, we're already looked at the tech sector, which is basically what's in the QQQ. So nothing really that stands out that's any better than looking at those two. I think of those charts that we looked at, this one is the one that's the most interesting to me. I don't think I've ever actually traded FTech before, so I'm not sure what the options look like, but let's take a look and see if we have some liquidity here. Not much. And the spreads are enormously wide, so forget that one. We can't trade that one. That's a shame because I like that pattern better. But we can look at the XLK. We can go back and look at that list and maybe pick out a couple if this one doesn't work out as well. I'm pretty sure this one's more liquid. Traded the XLK in the past. It has some liquidity to it. Yeah, it's not bad at all. So much better with the options there. Wish that the FTech one had a more liquidity. The only issue here is we skipped from March, which is, you kind of are on the cusp now where you would like to start looking towards April to put on a strangle. March, you need it to move pretty quickly. And you might say, all right, well, once we get to February expiration, you know, we might consider going further out because this is 59 days, which is on the low end of where we want to do with these strangle, which is more like 60 to 90 days. So you can see it's kind of on the bottom end of it. So you're right off the bat, you're kind of requiring this to move. ETFs don't necessarily move that fast. This one has been a bit more volatile, as you can see. Moved down pretty big, as everything did when the COVID news came out. Pretty big move back to the upside, consolidation. So all I'm saying is that you have less of a time cushion with doing March right now than you would normally like. It's close. You know, we're looking for 60 to 90 days, and this is at 59. So you can say, well, it's only a day short of your time frame. That's true. Just saying that you want to keep an eye on this one. You need it to break out in the not too distant future. So let's just leave that one for now, and we'll pull up a few on just the plain old consolidating list, see if we find some names that we know that can move. Something else that I'll show you that in a minute when we get to questions. So we're going to move to questions here in a couple minutes, as we're trying to be respectful of time and not run on forever. A lot of familiar stocks in there. There's McCormick still on there. Pfizer, wow. Not my favorite stock to trade because it doesn't move a whole lot, but isn't that interesting with the virus news? It's just such a monster stock. It's literally the definition of turning a battleship in the ocean to get this stock to move. So it had that breakout move with all the vaccine stuff, and now we're right back down to it. I was just curious with that. I wouldn't want to trade that for anything, but just was curious to see why it was on the consolidation list. You would thought it would still have been with an ADX higher with the breakout move. McDonald's. Pretty decent descending triangle there. That one would definitely have to be at least April, because it's not the most volatile stock either. But you can see it can move when it wants to. Let's see if there's April options on Mickey D's. Yeah, there is April. Just started trading today. A few contracts. Spreads aren't that, yeah, they're a little wide, but it just started trading with the January expiration last Friday. So it'll catch up pretty quickly. So April expiration's 87 days. That's more like it. That's more like what we're looking for. And going out into April gives it a bit more time to move. First thought is, was a $210 stock, is it going to be too expensive? It's a little bit high for our regular alert process. I mean, there is a strangle that could be done right around a 20 delta. You kind of want to give that one a couple days to let some liquidity come into the April options. And if you let a couple days go by, the stock could break out. So let's see what else we can find. Duke's still on the list. I'm just trying to find a familiar name, that because you start to learn a lot of these that consolidate, break out, consolidate, and break out, and do it consistently. So you get used to these names. SJM is the opposite of that. One takes forever to move. Waste management. Not so great. Wanted to look at Yum down here too. Yeah. Sherwin-Williams, there's another big one that can move. $740 stock, but to move up to something that high, you would certainly have to have a great pattern, and that's not one. That's more of a sideways consolidation. The airlines are getting ready to report earnings, so this could be an interesting one. Airline sector is about to start. I think United reports tomorrow. I think United Airlines starts tomorrow. So the ADX has moved down here, but again, not a great pattern. And there's probably some volatility that's been pumped into these because the preliminary news has not been good on airlines. They reported that I think their average ticket price is down 30% from a year ago. I think that's, quote me on the 30%, but it's down a lot from where it was. And obviously a year ago was right prior to when all the COVID stuff happened. So there's a lot of concerns about that effect it's going to have on the earnings, but that pattern isn't great. And there's a lot of those odd ones on here. United Health, that's a sector that's in the news. We already have Northrop, another sideways. consolidation. So I think just looking at the list so that we can get to some questions here before we wrap things up. Let's just stay with XOK with the understanding, we'll put a little asterisk by it that having to use March options, we want to keep a close eye on this one and not give it too long of a leash, if you will. First blush, I didn't really see anything on the list that looked really attractive other than that. So I'm going to make a note of this. I don't know that we found one that we really love so much. I did want to show you SQ before we open it up to questions, which I'll do in just a second. Note that we have this wave 5 here, and look at this. And we know this is a stock that can move. So why wasn't it on the list? That's why, because the ADX hasn't dropped down below 15 yet. So I've been watching this one, would really like to see that ADX come down lower than that. You're probably not going to get that opportunity because the triangle just looks too well formed at this point in time. Doesn't look like it's going to give you a chance to move for the ADX to come down. And I just want to, we go back to March and June. It's in the same cycle with no April or May options. Jumps from March to June. Super liquid though, as you would imagine. But that's one that we have our a new high value portfolio for our subscribers. They asked for it, so we created it for them, which allows trading more volatile or higher dollar stocks that fall outside our normal $500 of risk per alert scheme. Had pretty good success with it in early trades. That's where this one would have to go. Even with the March options, they're expensive for the delta. But you know why? Because the stock doesn't really sit still for very long. That's why I'm saying the odds of the ADX getting back down below 15 are slim. So does a stock have to have an ADX below 15 to break out? No, it's just one of the criteria we talked earlier about when a triangle forms, and sometimes they form a larger triangle and it's frustrating to have to wait. Normally with a lower ADX, the stock is closer to the breakout point. So you can have a stock that's forming a triangle, the ADX is around 20, it's coming down, and you're like, I think it's going to break. You go ahead and put it on, and then it does form one of those larger triangles, and then the ADX finally comes down. That's been the experience over time, which is why that's one of the guidelines that we use to get in, having a lower ADX. But they don't always have an ADX that gets that low on the breakout. So you have to look at the pattern. Every trade is always individual. I've talked about this a lot with my golf career in the past. The analogies that I give or the comparisons is trading is the same way. Every single trade is different. When you play golf, every round's different, every hole's different. Play the same course every single day, and you play the same holes, but you play it different, right? You're in a different spot, different yardages. Everything's different every day. And same thing here. Every trade is different. So we have the guidelines that we follow. So that low ADX is not a rule like the 10-day moving average. That's a guideline that we follow. So I just wanted to point that one out. I'm going to make a note that I pointed it out tonight here. And let's see if it does break out in the meantime before next week. So just making a note there. All right, we'll go ahead and open it up to some questions with the time that we have left. Netflix, you probably know that Netflix was up big after hours with higher than expectations on new clients. So see that I was kind of watching this one too, looking for potential move back down to 480. And if the after hours holds through, it's going to rocket back to the upside tomorrow. We'll just have to see. Usually, you know, we talk about after hours and talk about the futures a lot because normally the market follows that. Not always. Sometimes things change before the market opens. But at this point in time, it looks like Netflix is going to have a big move to the upside. when you say APPN, are you APPN is the actual stock? I'm not familiar with this one. Well, it's made a nice move. There's your head fake. So it did have a triangle. Where's that ADX? Man, it didn't get low enough. That's why it never showed up on the search. But here's an example of a stock that broke out and the ADX never got down below 15. So this is a concept I was just talking about with Square. And there's your head fake. Okay, so you had this move here. There's your breakout move. No follow through day. Broke out again. No follow through day. And where did it go? To the upside. So how many people got faked out here and would have had a straddle or strangle on it and took the call side off, thinking that we're moving to the downside? A lot of people, I'm sure, got caught, not just in a straddle or strangle, but thinking that, oh, this is going to correct back down. And then it turned and reversed on them. So there's your head fake. That's why we do the strangles, and that's why we're really careful about looking for that follow through or confirmation day before we take the other leg off. This is an absolute perfect example of that. 100% exactly the reason that we have those rules. And then J&J, this is the one I was talking about. This is the one I missed, not Intel. This is the one I missed because I was waiting on it to come back down to 155. And there you go. See, this is what I was talking about. I was waiting for it to come down to 155, and then they come out the next day saying that they've got a vaccine ready to go that only is one dose. You don't have to do 2 doses like you do with Pfizer or Moderna there. So obviously that's created interest, and the stock moved back to the upside. Was totally on this one, totally watching it, waiting on it to test 155. We've talked about it in these broadcasts before. You guys have been asking about it. And that's the thing. Sometimes you just get outsmart yourself, get a little too cute, whatever. But you know, the odds are it would have come down to 155 if they hadn't come out with the news. I was like, couldn't you waited 1 or 2 more days before you brought that out? But they didn't. So it does look like 170 is the target we've been talking about for about a week now with J&J. That looks like where it's going. The DMI looks pretty good. The ADX is rising. The positive directional indicator is trying to get back above it. It's not at 40 yet. It looks to have the momentum to make it to that 170 level. After that, I'm not sure. We'd have to wait and see. Thanks, Carrie. Appreciate that. Edmonton was a really nice city. The XLE, we talked about energy. We talked about the what's the energy stock that we talked about? Duke, but not a 5-wave pattern. And look at the DMI. It looks pretty decent. Zigzag pattern. Not the greatest, but it's there. And here's that 61.8% level, which is the target because we only had a 38% fib level in that area. B wave correction, so 61.8 is the resistance level. We talked about this before. We've looked at this before, Pankaj. And then we have to wait to see now if we're going to have 100% extension. The DMI is leading us to believe that's going to happen. But wow, Jana, thanks for the comments. Now you guys are really making me miss the live events. PAYC, some of these. Right here is where this needs to hold. We talked about this last Thursday. We'll talk about this again this Thursday, I'm sure. That's where it needs to hold. Really don't want to see it contest this previous floor. It could do that. It's well within the Elliott wave rules to do that. Really don't want it to hold this level and turn and head back to the upside. So the next couple of days are going to be really important for Paycom. Just a tiny bit oversold with what happened on Friday. Friday was the big move lower. It was trying to hold support right here, but there really was nothing there. It was trying to hold, but here's where the support is at 400. So we've got Quasi doji, not really one, but we have to see if that's going to hold there. UOA. Some of these you guys are going to look at on Thursday night, subscribers. So UOA, is that the correct symbol? UOA. Not familiar with that one, and software doesn't. Thanks, Brian. Holy cow. Appreciate the comment. Carrie, let's look at MOMO. It was a good question. Am I still watching it? Yeah, when you have something that breaks out real quickly like that, we are keeping an eye on it. And this is what we talk about, vertical moves, right? In vertical move, you come back. So it's back down towards its 10-day moving average. So are we still watching it? Yep. And looking at the DMI, still looks really good. So what I want to see is it show a break, because it couldn't hold it last time, right? So when it got up there, we actually got out the high of the day. So our alert went out with good timing. You see it broke back down. Want to see it trade back above that level again. If it trades back above that level, even if it doesn't close there, we may look to go right back in this one. So that's a good spot. Carrie, we may very well do that. Yes, it's still on the list and still watching it. But if you're wanting to know what's the rationale behind it, that's what we're watching for. I guess the first thing was the move back to the 10-day moving average. It's done that. Now we need to see it trade back above 16. You can see clearly what a level of resistance that is. So last time it looked like it was, and we made the right move, right? Because you could have easily said, well, you're breaking above that level. Why are you closing it out now? Look, this thing has a ton of room to run. But gosh, once they get to that overbought level, you just got to take that gain, especially when you can make over 50% in less than 24 hours. You just have to take that. That's when the market gets mad at you if you don't do it. It's like, you know, you're being greedy. Here we're giving you this and you're not taking it, and they get really mad at you. PLTR. Another one we'll look at Thursday, but we'll look at this one now because we're moving right back up here. So there was a break right back to the upside. Just all the confidence in the world that stock's going to make a big move. So not really worried about it. Ray, is the ADX something that you use for evaluation of momentum for day trades, entry times, such as 5, 10, or 15-minute charts? 100%. Good question. Yes, the ADX, I look at that on the 3-minute futures chart that I look at. All the rules that we talk about still follow through on shorter term. So if you're trading futures, currencies, or just flat out day trading stocks or whatever, and you're watching it, I would encourage you to get really good at looking at the ADX on a shorter time frame. It works extremely well. And I would pair that with the CCI. So if you haven't looked at our trade scan series, those two, the CCI really complements the DMI really well if you're looking to day trade. Really get good at that CCI too. And those are the two things that I have on my intraday charts, those two indicators. And they work really well together, and you can see some intraday moves along those things. So again, both of them are featured on the TradeScan series. You're probably familiar with them, but if not, take a look at them. But I would encourage you to put both of those on your charts when they line up, and you've got a pretty good move. Is Duke still okay to enter? Go back to it. Yeah, because it came back down. We didn't get the follow through day. So there was a breakout, no follow through, breakout, no follow through. So it'd still be fine because it's still sitting here right on this level. So yep, the answer is yes. So we looked at the Qs. Yeah, the NASDAQ futures are up 61. That's a good point. It's the S&Ps that aren't doing much. MA and KO, MasterCard and Coke. Massive support here on MasterCard right here at this 320 level. Really difficult to understand this move back to the downside here with more stimulus. Checks getting ready to go out. Question is going to be how much. Most people think it's going to be that additional $1,400 to make it $2,000 for the $600 that was just sent out. People are going to spend that money. So from a fundamental standpoint, it's hard to understand this kind of a scenario here. But the key here is right where we are. 320 needs to hold. Last time it broke there, it's like, what are we doing? And right back to the upside. So there's your definition of a V bottom there. So right now we're right back there. But this one is in a real trading range. Could be a candidate for an at the money butterfly. But then the question becomes, when you see this kind of stuff, and it's been doing this since last August, how long does it continue? Just, you know, it's in a bunch of flats. Difficult to have a read on that one. Coke, KO, had a really rough time. So you can see that Coke's made a pretty significant downward move. And there is the support, and it's trying to break that. It's really difficult to envision that we're going to break through all this support, but if it does, then you've got an equally quick move all the way down here to 44. So if it doesn't hold right here, then you'll see 44 pretty quickly, and that should hold. Forget this stuff that occurred with the COVID stuff. 44 should hold. You know, it's hard to say why would it come down that far, but at this point in time, it looks like it wants to. So I don't put as much weight in the DMI on downward moves. Look at other indicators for downward moves, but that's about as strong as it looks on a move lower. So I know they're doing some more mergers and acquisitions. They're always trying to do that. TXN, and we'll look at Apple too. Nice break above resistance there. An extended wave 5, so we're already at 132%. And the ADX is getting awful close to 40. But be careful. There was a really nice day today, breaking out of that support level. Probably get the follow through day tomorrow, but the ADX is starting to get, I mean, it's not quite there yet. It's not above 40 yet. But if you get a follow through day from this move again tomorrow, might want to start to be a little bit cautious. It could get to that 161.8% extension level with the DMI, but it's getting up there. So just keep your stops tight, or hedge off your option positions. So you can see what's going on with Apple here. We came up, pretty standard stuff. Moved to the upside, hit the previous high, came back, and what's occurring now? Just as classic as it can get, right here with a really nice, look at this, descending triangle in the wave 4 with what happened today, doji. So that's probably it for the consolidation. So we're likely going to see breakout move. Elliott would tell you it's breaking out to the upside because of the pattern setup. DMI is giving you no indication which way it's going to go. It's saying it could go either direction. So we'll see, but I don't think we're going to have to wait very much longer. Perfect 38% wave 4 correction. Exactly what you want to see in a stock that's expected to continue to the upside. You correct back down to a fib level, you consolidate in a triangle, and then you go back on your way back to the upside. That looks like the expectation there. CRM, Salesforce came down, filled this gap lower. Yeah, Salesforce is difficult right now because they're on such a major acquisition spree. Keep buying stuff. So that's, I mean, they're doing really well, but every time they do that, it's like, all right, well, how long is that going to take to have a positive effect on the bottom line? So really good company, very good company. And yeah, you're right. Cash came down and closed that gap and it's consolidating now. So maybe it wants to go back up. Still have a little bit of a gap here that needs to be filled back to the upside, but it's got to hold right here first. Interesting that the ADX is moving up. with the stock consolidating. So something's probably getting ready to happen there. ROKU. Let's look at ROKU, Janus. Look at that. I've been watching this one. That's why I was eager to look at it when you typed it in there. Trying to find an entry here, but tell me where you get in. I mean, it's easy to go back and say, you know, you could have gotten in anywhere along there, but it's just so vertical. And then the 10-day moving average is catching up. So the 10-day moving average is going vertically as well. But when you go back and you see this, and so let's take a look at that chart back here. It's like, all right, well, let's wait for it to come back down to earth here, maybe close this gap, come back to the 10-day moving average, and it didn't. It just kept going. So that one's been frustrating because I've been watching this one as well. So the ADX was coming down. Again, you would have said, all right, let's come down, fill this gap right there. Let it come down, fill that gap. Let the ADX get back below 40, get underneath the positive directional indicator. Perfect scenario, perfect setup. It didn't do it. Stock just kept powering to the upside. It's really difficult to enter now with an ADX above 55. So it's one of those that you watch and say, all right, well, we just have to move on and look at something else. But if you're in it, I don't see any reason to get out. If you're looking for an entry, I don't think this is it. But you know, if you come back and we look at it next week and it's up at 500, you're like, you know, why did you say it wasn't a good time to get in? I'm not saying whether it's a good time to get in or not. All I'm saying is that the indicators are saying it's overbought, and discipline would make it hard to enter a position now on something that overbought. You know, same thing that occurred back here when we were, you know, 340, and now we're up at, or 400, excuse me, and now we're up at 430. I was trying to say 30 points ago, it was overbought. And it's literally 34 points higher than that. So could it continue to go to the upside? It could. Stocks can stay overbought or oversold for a while. They eventually come back to roost. The entry would have been back here, but that's Monday morning quarterbacking, right? That's easy to say, oh, you know, that's when we should have gotten in. But that was 100 points ago. Tesla, who wouldn't be an event without Tesla? Lemonade's one we haven't really looked at much, so we'll look at that one. Look at this. There's a triangle. Remember we talked about how Elliott said, and we do too, we focus on the bigger triangles with our strangles, but there's a lot of small triangles that set up in different positions. There's one of them. There's one for you right there. So you've got a nice wave 3 move to the upside. You want to see this positive directional indicator come back, but the fact that it came down doesn't mean anything with the fact that it's a triangle. And the ADX it's up there, but you can see it's not where it was before. Here's something to watch if the ADX starts to turn back down though, is are we starting to see a pattern of lower highs in the ADX telling you that this upper move is starting to run out of gas? Again, just because it's running out of gas doesn't mean it's officially over. I say that every time, but it bears repeating so people don't misunderstand. When the strongest part of the move is over, it doesn't mean the entire move is over. It could still go up. But when it goes up and the strongest part's over, it's more susceptible to a pullback. So Tesla's getting ready to do something, and we'll probably find out in the next day or two. Right now, Elliott and the DMI would lead you to believe that there's a chance that this makes a positive break. We're at 845. Is it going to see 1,000? Well, we'll find out. But remember, when it breaks, you need to see the follow-through day as well. So this is a pattern that I really like, this vertical move with a triangle. The only problem is that's not a very big triangle. So it's, I mean, from bottom 800 to it's about 100 points wide, which in a stock like Tesla is not that much. it would be right on the borderline of being able to put a position on here. But it does look like something's getting ready to happen with Tesla. Let's look at Lemonade, and then we're going to wrap things up because that's a symbol that we haven't really looked at very often. LMND. Confuse the computer there because it's on the New York Stock Exchange. There you go. I mean, there's your classic. What goes straight up quite often comes straight back down. How many times have you heard me say it? And there's your little triangle. Nice small triangle. Got a vertical breakout. Doji. Now this is a classic. This is a great one to finish on. So you can see here we had a doji right at the point of this triangle. So we got a really nice symmetrical triangle. Boom, vertical move coming back down. Now the question becomes, does it hold here at above the top end of the wave 4, or is this the move all the way back to that point of the breakout, which looks like that could be very well what's going on there. Is it's going to come back down, test the point of the breakout. Remember we talked about this. Triangles, when they break out, they come back down. Don't know for sure when. This is an example of one that quickly turns around and comes back to the downside. We had one earlier that was taking its time. So pretty tough entry to go long right now. We are getting in the area of where the wave 4 could label at some point in time and hold. But gosh, you got to respect that 120 level, at least something close to that. We're at 140. We're not very far away from that now. So keep an eye on it, and that could be an entry. If it makes it to 120, that would be a really good entry to go back to the upside and finish its climb. This is 100% exactly why I hate this vertical stuff, because of that. It comes vertically back down. Thanks, everybody. Appreciate your attention. With the event earlier, my voice is about done. I thank you for the day. Have a great evening. Have a wonderful week. Look forward to talking to you again next week. Take care, everybody.